Today's Tuesday, May the 12th, and we can see that the volume in the markets was about the same as we've seen in the last few days, few weeks. NASDAQ again was particularly high, but the S&P and the Dow have been consistently lower. What happened around 1 o'clock was that the market started to tank, and about 1:30 I took off some Home Depot verticals and some Wayfair verticals, leaving me only with Home Depot covered stock, and I still have some Wayfair, but I took off the profitable ones, and I've still got a couple or three more that I'm holding on to, which are in a losing position. But we've been talking about the possibility of moving down, and we saw it today, and it was right around Anthony Fauci's presentation to the Senate, where he really was saying in a polite way that it's too early for many states to be opening up, and that there could be some repercussions and some bad news ahead. So let's take a look now at the stock market breadth indicator, because we had the decliners 3-1 on the advancers. What does that really look like in terms of the New York Stock Exchange? Now, we had our MAC AD summation index make its first downward move since March the 18th. So since March the 18th, we steadily have been decreasing or increasing the summation index, and today we pulled back just a tiny bit. But it could be the beginning of something larger. We also had our first negative oscillator since April the 3rd, and really since March the 24th, when we had a whole string of negatives. So that brings our oscillator down to the zero line. Do you remember yesterday I said that we had to have something like 1,300 or 1,900 differences in the A to D to hit the zero line? Well, we did that, and we did it by just a bit more. So now we've got one lower low here and a second lower low, which sort of indicates that we're on our way now down to test more lows and heading towards more the oversold area, because we had this strong bounce here, but we had this weaker bounce with money moving into the market, and the bears coming in and just whacking it down for 2 days in a row. The volume on a stacked basis was a little bit higher than yesterday, and just barely higher than any of the volumes last week, but still low enough to be lower than the previous 3 weeks. And our decliners for 2 days in a row now have had significantly higher share traded volume numbers than the advancers. What does it look like in the charts now? Let's go to the SPX, and the SPX is moving down towards the cloud. Let's get rid of this here so we can see it a little bit better. We have the 200 extended moving average, which was resistance back here on April the 29th. Then we had a test of the cloud. Now we've had a test of the 200 again, and we're on our way down. So if we lose support on the 50 EMA, then we're going back down to the cloud. And you remember in my SPY positions, looking like this, I have some 270 puts. These are the July 270 puts, and I sold the 245 puts. I had 5 of those, and today, just 2 minutes before the closing, I added 3 more. So I'm really looking now at the SPY as heading down to at least to the cloud, and I'm beginning to think more negatively. After resistance for the Chiku span on the 50 simple moving average, it certainly does look like it's moving down to the 50 EMA, and right around here, which would be Friday or Monday of next week, we have a coincidence with the top of the cloud and the Chiku span coming down to the 50 EMA. So take a look at that, and let's just draw a green line in the sand right there and use that as a reference. Apple was certainly very strong throughout the day. Had it hit a high of close to 320, but then with the rest of the market pulled back. Now, why is that significant? Because we hit the top of the Gartley yesterday, and it looked like we might break beyond the Gartley, but now we've pulled back. So correct fashion after the completion of a Gartley, and this is called a bearish Gartley, because what follows is a bearish pattern. And we would see an A to B to C, sometimes A, B, C, D down before we start another Gartley or some other kind of pattern. So we're looking for completion of the Gartley there. Now, talking about Gartleys, Home Depot also finished a Gartley yesterday, and now it equally has pulled back. Caterpillar has just been perennially weak, but now it's fallen out of the clouds. So it's really, Caterpillar's really in trouble. So if you're holding the stock, it's ex-dividend. The dividend will be paid possibly this week. But you want to have short calls on top of your stock. FSLY, Andy's stock, still shows continued strength. Great trade by Andy there. Netflix down. NVIDIA down. Now, it didn't quite get to complete its Gartley, and it may yet. This is an alternate bat, and unlike a bat pattern which we saw for Home Depot, this is a bat pattern with a 50%, which means its typical high is roughly 90% of X to A. But when you get into the alternate bat pattern, which is only 38.2% on the first bounce back, you can get to 113% of XA. And that's where NVIDIA would be heading to if the market wants to cooperate. Smile Direct had a big pullback today, and its first big pullback since Andy pointed that out. Whirlpool continues to be a very weak stock. Those are the ones that let's look at one more, and that is Wayfair. And I took off some Wayfair and some Home Depot today. I'm still left with some Wayfair, as I said, but a little bit of a pullback here. This is still a good stock, and it's going to benefit from all the retail closures because Wayfair buys stock from overstock positions in your brick and mortar retail. So there's going to be some good inventory for Wayfair to hook onto. So it's still a good stock to hold on to, but we might see a bit of a pullback. So where are we going? The McClellan oscillator would tell us that we are probably heading down. The 50 EMA is going to be attractive. So I would be looking for us to pull back to the 50 EMA and then the top of the cloud. And for the long term, into the summer, I'm looking at getting down to the 2700 area.